Welcome back to the Deep Dive. Today, we are opening the books on high-performance decision-making. The sources in front of us break down the SignalDeck analytics engine, which is, well, it's a lot more than just a trading journal. It's really a mechanism built entirely around enforcing intellectual honesty.
It really is. It functions as a flight recorder for your entire trading history.
Yeah.
And look, if you are serious about treating trading as a business and not, a hobby or some form of gambling, you just need this level of structural analysis.
Right. And our mission today is to understand quickly and thoroughly how these high-level analytics platforms work. Specifically, we're focusing on what feels like the hardest part of the whole process, forcing that rigorous, objective self-analysis.
The postmortem.
The postmortem, yeah. And that's where most amateur traders just quit, because it's painful. Reviewing your own mistakes is never fun. SignalDeck seems to be designed to make that pain productive. Okay, so let's unpack this. I think we should start at the foundation, right?
Yeah.
How you even build a universe of structured data in the first place.
Exactly. When a new user logs in, they're immediately steered toward this foundational concept that most retail journals completely miss, which is you cannot analyze what you haven't first defined. So in the navigation bar, you've got the standard dashboard and all trades, but the really critical sections are strategies and tags.
Okay, this is where I see the first moment of, productive friction. And I think that friction is a good thing here. It forces the user to set up their rules before trade is even placed. Why is that pre-categorization so critical?
Because it completely eliminates what they call narrative fallacy, creative bookkeeping. Most traders, after a trade works out, they'll kind of retroactively invent a strategy to explain why they were brilliant.
Right, I knew it all along.
Exactly. SignalDeck makes that impossible. You have to set up your defined strategies, the actual objective rule sets you follow, before you're even allowed to log a trade against them.
And signals fall into that too, I imagine. Can you give us an example? What kind of detail are we talking about?
So signals are the specific, repeatable market conditions that are your triggers. The platform requires you to define things like a spring pattern, which in, say, week-off theory means something very specific, or a no-supply indication. These aren't just vague feelings.
They're concrete patterns.
They're concrete chart patterns you have to predefine. So when you enter a trade, you're just ticking boxes against a validated checklist. You're not writing an essay on your gut feeling, and that's the difference between data input and, creative writing.
It sounds like the platform insists you treat your strategy like software code. It has to be documented, version controlled, and tested. But if you do that across hundreds or even thousands of trades, that database must get huge. How do you find what you need?
And that's where the global filter bar comes in. The documentation calls this the most powerful tool on the UI. And you really can't overstate its utility. It just sits there persistently at the top of every single screen.
Every screen. So
Yeah.
Dashboard, trades, all of it.
All of it. And it allows instantaneous layered slicing of the entire database.
So just hypothetically, if I wanted to ask it, show me how my V reversal strategy did, but only when the VIX was above 20 and only on my options trades. I could do that.
Precisely that. You select strategy, V reversal. You put in the date range. You filter by tag, options. And the data instantly regenerates. The whole dashboard shifts to reflect only those trades. The P&L updates, the SQN score, which we'll get to, recalculates for just that subset. It lets you prove or disprove if a rule set works better under certain conditions.
That structural integrity gives you the confidence to then dive into the really professional metrics. Which brings us to the dashboard. This is where I think the platform separates the pros from the crowd. We're moving way beyond simple P&L.
Oh, completely. We're looking for evidence of a sustained statistical edge. The focus shifts from how much money did I make yesterday to the actual statistical quality of your system.
So first up is the R multiple.
Right. The R multiple is the entry point. It's basically the expectancy of your system. If you risk $100 and you typically make $150, your R multiple is 1.5. Simple enough.
But just being profitable doesn't mean you're stable. And that's where the SQN score comes in, right? System quality number. That sounds very serious, like something from a bank's internal audit.
And that's a good way to think about it because it measures the robustness of your system. SQN combines both your profitability and the consistency of your results. You could have a great net profit, but if it came from one massive lucky win that covers 99 small losses, your SQN is going to be terrible.
So a high P&L with a low SQN means you're basically just gambling. You had one big outlier that's masking a system that's actually decaying.
That's exactly it. The source material gives some goalposts here. Scoring over 1.7 is considered robust. It means your system is statistically solid. But if you hit an SQN of 3.0 or higher, you are, and this is a quote, crushing it. That's the metric a portfolio manager would look at.
That gives you such objective feedback on your process, not just the last outcome. Okay, now let's talk about the one that sounds the most terrifying to me. The Kelly Criterion. Why is this so important for risk management?
The Kelly Criterion is it's advanced risk math that gives you this terrifyingly honest data because it calculates the theoretical maximum percentage of your account you should risk on any single trade. And it bases that calculation only on your past performance, your actual proven win rate and payoff.
So it's not based on what I feel the risk should be. It's what the math says my risk should be, given my actual skill.
It's a mathematical governor on your greed and on your overconfidence.
Yeah.
If you have a razor-thin edge, let's say you win 51% of the time, Kelly is going to recommend a very, very small risk exposure. It stops you from over-leveraging based on a hunch.
It moves the decision out of the emotional part of the brain and into the logical part. Exactly what you need.
And to deal with the psychological side of things, there's also the expectancy momentum chart on the dashboard. The value here is that it gives you a really quick check for tilt.
Right, because most charts just show an all-time average, which is a lagging indicator. Tilt can happen in, what, a single afternoon?
It can. So expectancy momentum compares your results from the last 20 trades to your all-time average. If your recent expectancy is way below your long-term average, that's an alarm bell. It's an objective signal that bad habits or stress are creeping in.
Okay, so clean data is the foundation. Hard-nosed metrics are the feedback loop. Now let's go from preparation to execution. If clean data is the engine, the next step is making sure the data stays clean when you're under pressure. And this is where SignalDeck demands some in-trade honesty.
This is one of the features that really elevates it. When you open a new trade, the platform automatically records the broader market context at that exact moment. It's called the Market Context tab.
Why is that automated capture so much better than just, me typing in the VIX level myself? Seems like a small detail.
Because a trader's time is their edge. Every second you spend typing is a second lost. But more importantly, it eliminates selective memory. When you're excited about a trade, you tend to filter out all the negative context. This just forces the objective reality right into the trade log.
So what key data points does it grab?
It records three critical things: the SPY-RSI, so the S&P 500 strength, the current VIX, or the fear gauge, and the price of your asset relative to its 200-day moving average. So you get a snapshot. Is the market overbought? How fearful is it? And what's the long-term trend?
That's powerful. You can't claim later, oh, the market looked totally safe if the log shows the VIX was at 40. You have to confront the risk you actually took.
Absolutely. And while you're in the trade, the Journal tab lets you capture your subjective reasoning, which is also vital for the analysis later on.
And I noticed it's designed for speed here. You can type notes and just hit Priddle plus Enter to save instantly. You don't have to fiddle with a mouse.
That minimal friction is so crucial. If it's cumbersome, a trader will just stop doing it when things get volatile. The notes are where you capture your internal dialogue, moving my stop because of that volume spike. Those subjective thoughts are key.
And that copy history button seems really useful for collaborating or for mentorship.
It is. You hit it, and it packages everything up. The entry, the P&L, the market context, your notes, into a clean block of text you can paste anywhere. It's incredibly efficient. And what's fascinating is how all of this, the objective data and the subjective notes, all get synthesized for the post-analysis, which brings us to the AI mentor.
Yes. Let's talk about the legendary Dr. Floby. How is this AI analyst actually integrated into the review process?
Dr. Floby is the AI analyst. It's a little icon in the corner. And its intelligence comes from being completely context-aware. It doesn't just know about millions of trades globally. It has access to your personal data profile, your SQN, your strategies, the P&L of the trade, and crucially, all those notes you typed.
So I can ask it specific questions about my own behavior, not just, what is a stock?
Exactly. You can ask complex behavioral questions. Things like, review my risk management on my last 5 short trades, or what mistake correlates most strongly with my biggest losses this month. The feedback is tailored specifically to you.
Which leads right into the core purpose of the whole platform. The mandatory post-mortem when you close a trade. You can't just close it and walk away.
No, this is where the final discipline is enforced. Once the trade is closed, you have to click the button, Generate Mentor Critique Request.
That sounds less like a request and more like an intellectual subpoena.
It absolutely is. The platform packages the entire life of that trade entry, exit, market context, your notes, and sends it to the AI for analysis against your own rules. The feedback it gives goes way beyond you made money or you lost money.
Okay, give us some concrete examples. What kind of feedback does it actually deliver?
It targets specific failure modes. So it might tell you that you chased an extension, meaning you bought too far from a support level, or that you choked on noise, meaning you panicked and sold because of some short-term volatility that was actually irrelevant. These are hyper-specific, repeatable failures you can then work on.
Right. You move from a generic "I failed" to a specific quantifiable error. But the final verdict that requires the human to be honest, which is the hardest part.
It is the ultimate self-audit. After you get the AI critique, you, the user, have to manually select the final verdict, and you're forced to distinguish between a good win and a bad win. A good win is easy, you followed your rules, and it worked out.
But the bad win, that's where the psychological integrity is really tested. What exactly is a bad win and why is it so important to label it correctly?
A bad win means you made money, but you did it by breaking your own rules. Maybe you moved your stop loss when you shouldn't have, or you held on through a clear exit signal. Basically, you got lucky.
And the danger there is that the positive outcome, the money, positively reinforces the bad behavior.
Precisely. If you don't categorize that trade as a bad win, you are training your brain to repeat high-risk, rule-breaking behavior. And when your luck runs out, that behavior will destroy your strategy. Labeling it a bad win breaks that conditioning. It teaches you that the process matters more than the outcome. It's the highest form of discipline.
That is profound. I mean, it shows the software's main function isn't really accounting, it's behavioral modification. So what does this all mean for someone listening who is serious about treating their trading like a professional operation?
It means you have to treat your trading desk like a small, highly specialized company. And serious companies need an ERP system, an enterprise resource planning system to manage everything. SignalDeck is basically the ERP system for your trading desk. It tracks profits, yes, but also strategy, integrity, and your own psychology. It gives you the structure you need to build a sustainable edge.
And for the power users, the ones who want to move fast, the documentation highlight that it's all built for keyboard navigation. You can navigate without a mouse. D for dashboard, T for trades, N for new trade, and S to jump right to the search bar.
Speed and efficiency are everything. Any time you save on documentation is time you can spend on analysis.
And finally, it's worth mentioning the mobile functionality. The system knows that postmortem has to happen immediately. It's fully responsive. It uses a card view on your phone instead of a giant spreadsheet, so you can do that critical self-audit the moment a position is closed, no matter where you are.
A system that encourages discipline only works if it's there when you need it.
A fantastic analysis. So we've defined the structure, the metrics, and the critical psychological enforcement tools. We'll leave you with one final thought then, building on this idea of objective measurement. If the ultimate goal of professional trading is data integrity, what behavioral insights are you missing right now by not having an objective flight recorder, watching and critiquing every single decision you make?
That's the question that really dictates success or failure.
Until the next deep dive, keep learning and keep holding yourself accountable to the data.